Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is July 4th, so happy 4th of July. I hope everybody had a nice day today. You had fun, you stayed safe. I hope you're having a good 4th of July long weekend, and if you hear fireworks in the background, that's because it's nighttime and they started doing fireworks, and I'm here talking about stocks. So what do you do? So listen, the title of this video is how to trade fractals using the Alligator Indicator. So fractals are and the Alligator Indicator are quite interesting to me. I have been studying them for quite a long time. I'm going to explain a little bit about what they are, what fractals are, who developed them, why they developed them, and how it's applicable to trading stocks and commodities. I'm also going to talk about the Alligator Indicator, who developed that, and how they use it to trade. So I'm excited to show you this. I hope you're excited to watch it and learn a little bit more about fractals. But before I do, I just want to mention two pieces of business. One, I do have a YouTube channel, Gossett Trading and Mentoring Live, where I do trade live and I teach and I mentor Monday through Friday during the last hour of the market. So if you're free, please come and join us. Like I said, I do trade live, I teach, I mentor. I talk about all sorts of different entries that we use, and fractals being one of them. It's been a good time for fractals lately, for sure. So I did want to remind you that, and I hope that you'll come by and visit us and say hello in the chat. And again, it's Monday through Friday during the last hour of the U.S. stock market. And then second, I've got to run this U.S. legal disclaimer before we get started, so it's about 40 seconds. So if you could be so kind and just stick with me for 40 seconds, I would really appreciate it, and I will be back. Okay, be right back in about 40 seconds. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, so we got that taken care of. So let's get into it. How to trade fractals using the Alligator Indicator. So first of all, what is a fractal? A fractal is a type of mathematical shape. In essence, a fractal is a pattern that repeats forever, and every part of the fractal, regardless of how zoomed in you are or how zoomed out you are, it looks very similar to the whole image. You might look at a map of Florida, for instance, and you'll see, moves. But if you zoom in and zoom in and zoom in, you'll see those same exact moves. So it's just cycles within cycles. You can zoom way down. If you looked at a fractal, you could use an electron microscope, you'd see it, and you could look at it from a very high level as well, and you would see the same pattern. So let me get a picture here of Dr. Benoit Mandelbrot. Dr. Mandelbrot was a mathematician who was a pioneer in the study of the science of chaos theory and developed the concept of a fractal. Dr. Mandelbrot hypothesized that there was an underlying structure in nature that could be measured, and this is what started his research on the measurement of fractal dimensions. In other words, he believed that the measurements of fractal dimensions would show that there is actually order in chaos, because he studied chaos theory, and chaos is everything going crazy with no order to it. But his hypothesis was there is actually order in chaos, and you could measure these with fractals. So Dr. Mandelbrot began studying these fractal dimensions on random rivers around the United States. And what he found was amazing. The fractal dimensions of completely random rivers were exactly the same down to the exact decimal point. So what he did was, here's a picture of a river. And just like the stock market, you know, the river goes one way for a while. It has a little turn, comes back, has a little turn, turns. He measured all of these, added them up, divided by, I'm not exactly sure how he did it, but he looked at all these rivers and he found that the fractal dimensions of these little twists and turns before the river started to go one direction were all the same, which to me is just amazing. I mean, down to the exact decimal point. But, you know, if you look at this river, you know, you can kind of look at it as stock. Look, the river is consolidating here, and now it's trending here, and now it's consolidating here and trending again. So anyway, it's just amazing to me that he was able to come up with this and actually measure it. So, you know, in regards to trading, why is this important? So at the time of this discovery, Dr. Mandelbrot was working for IBM in a purely research capacity. But when he shared his findings of these fractal measurements of the rivers with IBM, they said, hey, this is great, but is there an application for these fractals that we could use to capitalize and monetize on this? So Dr. Mandelbrot took this into consideration, and he hypothesized that if random rivers had the exact same fractal measurements, then other structures in nature might also possibly have these same measurements, such as the stock market and the commodity market as well. So Dr. Mandelbrot went to work, and he did indeed find that the fractal dimensions of rivers are very similar to those of the financial markets, which to Dr. Mandelbrot was an indication that the financial markets are more of a function of a natural structure than that of just random human behavior. So let me read that again. Dr. Mandelbrot, when he saw that these fractal dimensions were similar to the rivers, he found that he was basically saying financial markets are more of a natural structure. They're not a man-made structure being moved by human emotions. It's really a natural structure. And so therefore, these fractal measurements working on rivers also work on the stock market and commodity markets. And that's what we're talking about today. And if they do, well, that's pretty interesting, right? So that's Dr. Mandelbrot. That's a fractal. It's a recurring pattern that happens in nature, similar to Fibonacci, right? You can find Fibonacci ratios in nature as well. So it's a good thing to compare it to, but it's not the same ratio. It's different. It's different little formations. And essentially, you know, when I teach all the time, I talk about stocks being in consolidation, and then they trend, and then trending stocks consolidate, then they either trend again, or to the upside again, or to the downside. So, you know, this is just essentially volatility. Volatility grows, gets higher, comes back, consolidates. The stock market tends to move sideways majority of the time, about 85% of the time. The stock market is just consolidating, moving sideways, stuck in a range. And other times it breaks out and trends. And that's the same thing with the fractals. So that's good to know. So, all right, now let's enter Dr. Bill Williams. And I don't know if you've heard of Bill Williams. He has some great YouTube videos. He has some wonderful books. Everything I'm talking about today is from one of his books, and I will show you that. The book is called New Trading Dimensions, and it is by Dr. Bill Williams, but I will put links to some of his lectures and also a link to his book. You can get it on Amazon or other places. But this is Dr. Bill Williams, PhD, physicist, founder of Profittunity Trading Group. Looks like his website here is profitunity.com. But wonderful book, really interesting guy. He is a physicist. He has a PhD. And so now let's get a little bit into what the Alligator Indicator. But let me give you a little backstory on Dr. Williams. So Now Winter's author, Dr. Bill Williams, who is a physicist and a lifelong trader, in his new book, Trading Dimensions, Dr. Williams recalls that when he read Dr. Mandelbrot's findings about financial markets having similar fractal dimensions to river, and therefore the markets were behaving the same as a natural structure, he was so excited that he could not sleep that night. He then started to work full-time on research to find out which fractal formations had the best back-tested trading results. So he developed the Alligator Indicator, and what is that? Well, it says here, the Williams Alligator Indicator is a technical analysis tool that uses smooth moving averages. The indicator uses a smooth average calculated with a simple moving SMA to start. The three moving averages comprise the jaw, teeth, and the lips of the alligator. You're probably saying, what are you even talking about? Well, let me take you over here. This is the alligator. That's now for my students and people in live stream, you're going to see this is a little bit different of a chart that I normally use, but we are just talking about fractals. So essentially the green line are called the lips, and all you need to do to plot this on your screen is use a 5-bar smooth moving average with the offset 3 bars into the future. So it's a 5-bar smooth moving average with the offset of 3 bars into the future. This is the green line. The red line is the 8-bar smooth moving average, offset 5 bars into the future, and this one is called the teeth. So the green bar are the lips, the red bar are the teeth, and the blue line, which is a 13-bar smooth moving average, offset 8 bars into the future. This is the jaw. So we have the jaw, the teeth, and the lips. So let's talk about really what a fractal is first in regards to stocks and on charts, and then we'll talk about how we use it in conjunction with the Alligator Indicator. So a fractal, like I mentioned before, it's a mathematical shape, and Dr. Williams, through all of his time and energy and study on finding what the best fractal pattern was in the market, consists of a high with 2 lower highs to the left. You can see here we have a high. To the left we have a high and a high, but they're lower than this one. And here, to the right of the high, we have a high that's lower and a high that's lower. So does that make sense? Here's a high. 2 bars are lower highs to the left. 2 bars are lower highs to the right. Now, we can have fractals the opposite way. See the bottom here? We have 2 higher lows here and 2 higher lows here. So this is a fractal trigger point if it went down. This is this line right here. Let me draw these here so you can see. So Dr. Williams does not discriminate between going long or short or anything like that. He really doesn't. He just waits for the setup and then he takes it. So again, this bar here would be a fractal to the downside because we have a low with 2 higher lows to the right, 2 higher lows, 2 higher lows to the left, 2 higher lows to the right. Here we have an upside fractal with a high with 2 lower highs to the left and 2 lower highs to the right. Now, just because you have this fractal, this is a downside fractal if it triggers, this is an upside fractal if it triggers. Just because you have this doesn't mean you go ahead and buy. This is just showing you that this is a fractal point to look at. Then the trigger point of the trade is in the future does the price go up over that high? Well, if here's the high, and you can go across, and yes, sure enough, back here on June 17th, this bar did go higher than here. So that, for Dr. Williams, that would be the trigger point. Now, a little bit of a trick question, because you can see here's a high with two lower highs to the left, high with two lower highs to the right. But do you see here we have a high with two lower highs to the left, a high with two lower highs to the right? So he would not be going off of this fractal. He would be going off of the most recent fractal. Again, here's the high, two lower highs to the left. Here's the high, two lower highs to the right. Here would be his entry. Now you might just say, Greg, isn't that just a breakout? It is and it's not. Every breakout, every fractal is a breakout, but not every breakout is a fractal. Make sense? Every fractal, every time you have a fractal, you have a high with two lower highs to the right, a high with two lower highs high with two lower highs to the left, high with two lower highs to the right. Yes, if it breaks out of there, basically breaks out of the range, it's essentially a breakout. But not every single breakout is a fractal. There's some fractals that don't have that. And remember, going back all the study he's doing, it's a 5-bar situation. High in the middle, two to the left, high, two to the right. It has to break out of 5. And you can see this would have been a fantastic trade. I mean, just literally a fantastic trade. Now, let me tell you a little bit about his entry and exit points. Okay, entry points, we talked about that, but there are 2 requirements. The fractal, if you're going to the upside, does have to be above the red line. This bar here did poke its head above the red line. And really the reason for that basically has to do with, the best way to put it, he does it with Elliott waves. And I don't study Elliott waves, but I mean, I understand them. But essentially, in order to have a high point above the red bar, you almost always have to have a higher low. And for my students and people that watch my live stream each day, I love higher lows. I think they're much better. So just by default, the way that this is structured, again, the fractal high before you take it has to be above the red line. Conversely, if you're going to take a short, the fractal point has to be below the red line. And you can see right here, here's the low of a fractal, 2 to the left, 2 to the right. Here's the high of a fractal, 2 to the left, 2 to the right. Either way this broke out would be a legitimate trade. It broke out to the upside of this fractal, so it's legitimate. But if it would have come down here and gone below this low, you can see the low of the bar is below the red line. So again, if you're going short, the low point of the fractal at least has to be below the red line. If you're going long, the high point has to be above the red line. So now I don't trade exactly this way, but I'm going to show you exactly how Dr. Williams trades. So he uses a pyramiding approach. So here he would take his first trade because it triggered the fractal, right? As it moved up, it moves up and up. And again, just to go back to basics, consolidation leads to strong moves. Strong moves lead back to consolidation and then lead to further higher moves or further down moves. So he would have taken this trade here. Here's the high of the fractal. He would have taken the trade. Up, 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 up. Oh, look here. We have a high with 2 lower highs to the left. We have a high with 2 lower highs to the right. He would have entered another position based upon the trigger of this fractal, which happens over here. Here's the high with 2 to the left, 2 lower highs to the left, 2 lower highs to the right. This day here is where he would have entered his second position. So he takes a small position. If it goes his way, he waits for another fractal, adds on. Now, there's no more fractals here. Obviously, this was a beautiful, beautiful trade. here we have a high. If we would come down in the next 2 days and make a lower high and a lower high, if it went back up above that, he would add on a third position. So that's how he pyramids up. And I'll show you some more examples, but you might be asking, okay, I understand where to get in. Where do I get out? Well, in his book, here it is, New Trading Dimensions, How to Profit from Chaos in Stocks, Bonds, and Commodities by Bill M. Williams. This is on Amazon. Like I said, I will put a link in the description below. I really recommend getting this book. It's not cheap, but it is really, really good. It will make you think about trading in different ways. It's not just indicators whatsoever. Again, he feels like that there is a natural structure in the markets. He just feels like it's there, and the path of least resistance will happen after you break through a fractal, either to the upside or the downside. But in his book, once you have a winning trade, he gives two options. If you get a close below the green line, that is one reason to take profits. If it's really moved up strong, he uses a close below the green line, and the green line are the lips. If it's not a huge runaway trade, if it closes below the red line, then that will be his exit. So, you know, he would have purchased this right here with the trigger of this, up, 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 up. Then it made a fractal, triggered another fractal here, up, 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 up. He will just keep buying this as high and as long as it goes. Now, when I first read this book, I first started setting up my charts, I was looking this. You see fractals all the time. They're all over the place. You know, if you're familiar with my work with V1s, V2s, there's V1s and V2s all the time. But it doesn't mean that they're valid V1s and V2s. And the same, in my opinion, goes for fractals. So what are the best setups for fractals? The best setup for fractals, and this is really where we start talking about the alligator, and it's kind of funny, but listen, think of the alligator. Remember, here's his lips, here's his teeth, here's his jaw. Well, you can see the alligator is eating. See how all the moving averages, the three moving averages, are separated from each other, like he has his mouth open, and now he's eating bull meat. Now, after he eats a lot, or she, I'm not sure if it's a male alligator or a female alligator, but after the alligator eats a lot, he or she gets sleepy, needs to digest, needs to go to sleep. Well, when you see how the moving averages are all intertwined here? Here they're one on top of each other and they're open, like the mouth is open. That means you're having a good trade if the mouth is open and the alligator is eating the bull meat or the bear meat. This is not a good time to enter a fractal. Now you said, Greg, didn't he just take another fractal here? He did. But it's because he already had a winning trade. He's not going to start off with a fractal this high. Here, you see how all of the moving averages are intertwined? That's when the alligator's sleeping. You want to trade fractals while the alligator's sleeping. In other words, outside of the alligator, in other words, when price is consolidating, when it's going sideways, right? I don't have to have these lines here. I don't have to have the blue and the green and the red line to tell me that it's consolidating. I can clearly see that it's consolidating. But, you know, if you can't see that and you want to make sure, you want to see it graphically, then you have the lines to tell you. But you see how the lines are all intertwined? This means it's sleeping. The best time to enter a trade, either to the long side or the short side using fractals, is when the alligator is sleeping. All right. So this was a fantastic trade down here because we have like I said, right here, the alligator is sleeping, sleeping, sleeping. We have a high, two lower highs to the left, two lower highs to the right, triggered, and boy, off it went. Let's take a look at some other ones. Let's look at Amazon. Oh, this is a good example here of, you see how we have a high with two lowers to the left, but only one lower to the right? This is an example of a breakout from this high, but it's not a fractal. So I'm saying all fractals are breakouts, but not all breakouts are fractals. And this is a breakout without being a fractal. That just caught my eye. So let's see, here Amazon, well, look, the green is above the red and the red is above the blue. You can see this has been a big up move. The alligator has been eating. This is not a good time to initiate a fractal trade. It's best when the moving averages, when the alligator is sleeping. Okay, well, let's look right here. Here's a high with two lower highs to the left, two lower highs to the right. So does that mean you see a fractal, you buy it? No, you would have bought it here when it took out that high. It immediately went up, down. No fractal here, but this is a fractal. See how we have a high with two lower highs to the left and two lower highs to the right? So here's the fractal. It triggers over here. Goes up, and down. Didn't close below the red. Keeping going. Here's another high with two lower highs to the left, two lower highs to the right. So let's recap. He would have bought the first one here when it takes out this fractal. Second position here when it takes out this fractal. Added on another position on this day when it took out this fractal. And what you'll notice when you can start seeing these fractals, you will start to notice that there's a lot of big days when fractals are hit. So where would he get out at this point? It depends how he chose. If he may have gotten out here with the close below the green, but maybe he was using the red. If he had been using the red, he would still be in it because it never closed there on a closing basis. But really the most important thing is waiting for the alligator to be asleep before you take a trade. Let's see if we can find some to the downside. Well, here's a fractal. I don't think I would take it though, because the mouth is eating bear meat at this point, green, red, and blue to the downside, waiting for the green and the red and the blue lines to start mixing it up. Well, this would have been the place right here. Here you have a high. Right here, you have two lower highs to the left, two lower highs to the right, and the alligator bars are intertwined. So here's your high with two lower highs to the left, two lower highs to the right. Does that mean buy? No, it has to be triggered. Well, here was the trigger. Man, was that a pretty sweet trigger, right? And he probably, I imagine, would have gotten out of it here with the close below both the green and the blue. All right, let's look at a short. And a perfect example of this happened on Thursday on Apple. And this is very interesting because this is the type of trade that it could have gone either way. Okay. Here's a high with two lower highs to the left, two lower highs to the right. So that would be a potential fractal if it triggers. Now, remember, we always want to make sure that the lips and the teeth and the jaw are intertwined and basically moving sideways. Yes, this is correct. So here's our high, two lower highs to the left, two lower highs to the right. The high has to be above the red line, which it is here. And look at this. Oh, not here, right here. Here we have a low with two lower highs to the left, two lower highs to the right. Is the alligator sleeping? Yes, it is. it's moving sideways. So at this point, whichever one of these triggers first, he would take it. If this fractal to the upside triggered, it is above the red line, he would take it. And here is the trigger here. Well, look, it triggers right here to the downside, and boom. Doesn't happen all the time. Of course, no trade happens all the time, but you can see now, look at the alligator, it's eating bare meat. But it's just another, really the alligator and fractals. The fractals are a trigger. The alligator having the intertwined lines are basically just showing that you're going sideways and consolidating, and that's always the best time to buy or sell. I don't like buying huge strong moves. I feel like I'm chasing. I don't like to short huge strong move to the downside. I want to wait till they're just moving sideways. That's when you get the biggest moves, because sideways lead to big moves lead back to sideways, and this shows you exactly here that is the case, right? So this would have been the fractal up here had it triggered. Here's the low with two lower highs to the left, two lower highs to the right. Here we trigger, and down. His stop would be a close over the green or the close over the red. Now, I don't trade this way, but I do like to use fractals in my own trading. My philosophy on trading is that I want to have the most confluences or combination of indicators lining up, whether that indicator is a moving average, whether it's a MACD crossover, whether it's some kind of RSI reading, whether it's a V1, V2, and or throw in a fractal, right? If I have two stocks, they look identical to me. They have the same, maybe they have a moving average crossover, maybe they have a under 30, over 30, they have some type of MACD crossover. If both of them look exactly the same, but yet one has a legitimate fractal, I would go with that trade. So, I basically look at stocks, I see what kind of indicators they had, I add them all up, see which one has the highest score at the end of the day, and that is the trade that I take. Because the way that I look at trading is I look at these indicators as groups of buyers, and you will increase your chances dramatically to have a profitable trade if you're in the company with as many other buyers as possible. If we take it to an extreme, if you're the only buyer and everyone else is selling, things not going up, right? But if you're in the company with lots of other buyers, then you have a much better chance of it going up. And the way that I do that, the way that I identify that, is I look at all the different indicators that I use. I add them up. I basically give them a score, put it in context about whether they're overbought or oversold. But I want to be in the company with as many other groups of buyers as possible. So fractals are also another way to do that. And they're fascinating. They really are. Let's just scroll back here on, let's just take a random walk back here. Well, you can see Apple at the moment, green is above the red is above the blue. This alligator has had a lot of bull meat on Apple. So, this is not the time to do it. You want to wait for these three moving averages to come together, get tangled up in each other. Let's go back and look here. Well, it starts here essentially, right? Here's a fractal. No, excuse me, that one's not a fractal. Up here you have a fractal, but now it's too high. Let's go back. Well, this is quite interesting. Look at Apple back here in February of 2020. You see how all the moving averages are intertwined. It's moving sideways. You don't need these to see that this is moving sideways. Well, look, here's a fractal right here to the downside. Here's the low. Here's two higher lows to the left, two higher lows to the right. Would that be a legitimate fractal to the downside if it triggered? It sure would, again, because the low of the fractal, the trigger point of the fractal is below the red line. You have the two higher lows to the left, two higher lows to the right. The bars are intertwined. The alligator mouth is intertwined. Basically, it's closed, it's sleeping. Look, there's your trigger right there. with the trigger of the low of that fractal. And boy, is that where it went to the downside. I do want to show you an example. This is a little bit different of a chart. This is a trade that I'm currently in, with the live stream. Bought it here July 1st, 78.21. You know, the reason I bought it, you know, I talk about moving averages and confluences of signals. Well, for one, we had a moving average crossover. That's good, right? That gives it one brownie point. We also went under 50 RSI, over 50 RSI. That is, I give that another brownie point. I give that another point as something good that has happened. Anytime you go under 50, over 50, I consider that positive. So go under 50, over 50. We have a MACD crossover. We closed above the 50-day moving average, which is good. And if you can see, we triggered a fractal. See the high here? Here's the high. Two lower highs to the left, two lower highs to the right. This, I'll draw the line here. So there's the high of the fractal. See the day that I bought it, it took out that fractal, and that's why I bought it. And it was up Thursday, pretty good, pretty nice, not huge yet, but I do like, because I do like that it's triggered this fractal. But that's how I look at using fractals. I use them in conjunction with all the rest of my indicators, and they basically just add points to a possible setup. And you know, in my live stream, I teach all about this every day. I do also teach private lessons, so if you're interested in that, you can get a hold of me. But you know, I teach all the indicators, all the entries that I use. I teach those in the live stream and also in my private lessons. So let's, I'll tell you what, real quick, just to help give I'm going to go through this pretty quickly, but this is my watch list. Let's just take a look. You know, here we are, Saturday, the 4th of July. If I look at Apple, if I'm looking for a fractal, anything interesting? Not whatsoever. The alligator mouth is open. There's no sideways movement. So there's nothing there for me. Adobe, same. There's really no sideways movement. It's starting to tangle here a little bit, but you really have to have sideways motion. AGQ, okay, so AGQ is a little bit different. You can see the alligator bars here. The alligator is kind of sleeping. It's kind of moving sideways. Over here, when the move was up big, of course, look, here's the green, here's the red, here's the blue. The mouth is open, of course, right? Because it's trending. Here right now, you know, it seems like it's had some move the last few days, but essentially this is moving sideways as indicated by the intertwining of the moving averages. So yes, here's a fractal right here. Here we have a high, two lower highs to the left, two lower highs to the right. So Dr. Williams, if it took out this high here, he would buy. Conversely, here we have a low of a fractal. We have a low, two lower highs to the right, two lower highs to the left. This would be his indicator to go short here. So he calls this bracketing, right? He doesn't care which way it goes. If it takes out this high, he goes long. If it takes out this low, he'll go short. So in the future, yeah, silver may have, you know, some kind of fractal to the upside or to the downside. Amazon, we already talked about that. It's obviously trending. The alligator is mouth's open. It's getting lots of Amazon bull meat. So really nothing there. Although technically, look, here's a low with two higher lows to the left, two higher lows to the right. Technically, yes, if we came down and hit that point there, it would be a signal that triggered the fractal to the downside. Although I wouldn't take that because this is not sidewards motion, right? Just like there's lots of V1s and V2s, not all of them are legitimate V1s and V2s. In my opinion, not all fractals are legitimate. You want it to come out of a sideways motion. Boeing, well, you are starting to get some intertwining here. Here would be a fractal to the upside. Here's a high, two lower highs to the left, two lower highs to the right. So yeah, right here would be a fractal to the upside. Here's a low with two lower highs to the right, two higher lows to the left, two higher lows to the right. This would be a fractal here. Alibaba, a little bit of sideways motion. We are starting to curve. So yes, close below here would be the fractal to the downside. Close below here would be the fractal to the upside. Berkshire Hathaway, one of my favorite. We have a high here. If we could get two lower highs to the left and then take that out, that would be legitimate. Because remember, we have the high of the fractal has to be above the red line. The low of the fractal to the short side has to be below the red line. So this one would qualify. This one not yet. Beyond Meat. Nothing really there. We don't have any bars above the red line. This one down here would be possible. We are starting to move a little sidewards there. Caterpillar, yeah, we're starting to intertwine right here. So here's a high. If we could get two more days to that are lower to the right side and then take out that high, that would be legitimate. Taking out this low of this bearish fractal here would be fine as well. Carnival. Well, here we have a high, here we have a lower high. We need another lower high and then go up to take that fractal out to be legitimate. It was above the green line barely, or if we break to the downside here, that would also trigger fractal. But again, not super sideways motion, right? Let's look at the Dow Jones. A little bit. We'd need two more days to the downside, then a rally. Walt Disney, again, the moving averages, they're spread out, they're not intertwined. So anyway, I hope that helped. Again, I am going to put the link to this book. Again, it's New Trading Dimensions, How to Profit from Chaos in Stocks, Bonds, and Commodities. That's by Dr. Bill M. Williams. He's very famous. He has some really good YouTube lectures, and I will try to get those links as well. Oh, sorry. There we go. There's Dr. Williams in his book, but I will try to get links on YouTube to some of his lectures, and I will also, like I said, put the link on Amazon to this book. So anyway, I hope that helps. Again, I do want to invite you to my live stream. I do every day, Monday through Friday during the last hour of the market. And I teach all this kind of stuff and really try to help traders, show them, what I'm taking, why I'm taking it, how I'm going to manage it either to the upside or to the downside. And we talk about fractals. We talk about a whole bunch of stuff others. So come by, visit, say hello, chat during the last hour of the market. And if you did like this video, I really would appreciate it if you would hit the thumbs up button. That would be nice. And other than that, have a great rest of your 4th of July weekend. Have fun, be safe, be good. I always say this in my podcast or in my live stream, but please try to go out and try to do something nice for somebody. Just a smile, a wave, say hello, give a nice gesture. We need more humanity in this world, and I think every day if we could just do one little nice thing for somebody, we could help that. All right, so thanks again for coming. On the way out, I do have to run the U.S. legal disclaimer again. I know it's your favorite part, but anyway, hope this helped. Take care, everybody, and I will talk to you Monday during the last hour of the trading day on Gossett Trading and Mentoring Life. Take care now. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.